Okay, let's start. His our topic would be on long-term assets. So the good thing here, class, is that the amount of detail that we will have to master will not be the same as what you have discussed in your financial accounting. In your financial accounting, number one issue there is on the initial carrying amount. And you can recall the problems there. You'll be given a list of costs, and you will be asked, out of these costs, how much will form part of the initial cost or carrying amount of your property, plant, and equipment. Then you have your subsequent measurement, wherein you will have to take into account the depreciation or the amortization. And the challenging problems there will normally include changes in the useful life, changes in the depreciation method, changes in the uh, residual value. But here, the problems here will be very straightforward. So the problems for long-term assets for the CMA exam would be a lot simpler compared to what you have discussed in your financial accounting classes. Aside from depreciation, another relevant concept for the subsequent measurement of your long-term assets would be your impairment. And impairment here would be should be given special attention class because the impairment under US GAAP is different from what you have grown accustomed to in accordance to the standards. Okay, and we will discuss the impairment process under US GAAP as we go along with the problems. So let's start with the first uh, question here. The company purchases a machine that it plans to use very often in year one, but then significantly less every year thereafter for a total of 5 years. Which depreciation method would be most appropriate for the company to use? The choices given here are the four commonly used depreciation methods. Okay, but for theory, what do you have to remember? What do you have to remember as to the depreciation method that should be used? Is the default straight line? The answer is no. But when do you use straight line? If the problem is silent. But supposedly, how do you choose the depreciation method that you would use? You should choose the depreciation method that would reflect the pattern of use of the asset. Okay, but again, if it's difficult to determine, then we will go to straight line. But I do not want you to think that it should be straight line all the time. Okay, the rule is choose a depreciation method that would reflect the pattern of use of the asset. Okay, the manner in which the asset will be used or consumed. And that is essentially what is the point here. So you should not immediately choose straight line method. Go over the problem and determine how then is the asset going to be used. It says here, in year one, it will be used significantly and lesser every year thereafter. So if you're going to use a depreciation method, you should use a depreciation method that would result in significant depreciation expense on the early years and lesser depreciation expense on the subsequent years. Does the straight line method achieve that? The answer is no. Under the straight line method, the depreciation would be equal throughout. The annual depreciation would be equal. Okay, and then for your units of production method, this could be used if it will be based on output. Okay, and then the sum of the year's digits class under the SYD method. What's the behavior of your depreciation? Is it equal throughout? The answer is no. It would actually be decreasing. Okay, and just like your double declining balance method, the depreciation expense would also be decreasing. Okay, the units of production method would already be out of the picture because uh, the depreciation there would not be decreasing but would depend on the amount of consumption. Okay, so the best answer here could either be double declining or the sum of the year's digits. Okay, so how then do we decide which between the two? What's the behavior of your SYD? Again, the depreciation is decreasing. But you will notice, if you've answered problems before, the depreciation expense under the SYD method, while it is decreasing, the amount of decrease is constant or regular. Okay? But under the double declining method, from the name itself, the decline would be double. So the decrease in the depreciation would be very significant in the subsequent periods. So between the double declining and the SYD, which of the two reflects the pattern of the use of the asset as described in the problem? It would be the double declining. Because it says here, it will be used very often, but then significantly less. Because of the word significantly less, class, we cannot choose some of the year's digits. Okay, so the best answer here would be your double declining balance. Number two already involves the impairment of long-term assets, class. So just as a quick recap, under your PFRS, when do we consider an asset to be impaired? When do we consider an asset to be impaired? If the carrying amount is greater than the recoverable amount. That is the definition of your impairment based on our standards. Okay, but you will not end there. You will ask the question, what then is the recoverable amount? And I hope you can still remember. What could be your recoverable amount? It is the higher between your letter V. Three words. First word, letter starts with letter V. Value in use. The higher between the value in use and starts with letter F. Fair value less cost to sell. Okay, so based on the standards class, an asset is impaired if carrying amount is greater than a recoverable amount. Okay, but is a recoverable amount a fixed or a singular figure? The answer is no. You will actually have to compare the value in use and the fair value less cost to sell. These two amounts will represent your recoverable amount. If you use the asset, if you recover the value of the asset for continued use, that is your value in use. Okay, if you're going to recover the value of the asset for continued use, the recoverable amount would be the value in use. If you are going to recover the value of the asset for disposal, then the recoverable amount would be the fair value less cost to sell. But why do we say that it is the higher between the two? Because the standard assumes that management is logical. The standard assumes that the management is not stupid. So if the value in use is greater, if your recoverable amount is greater, if you continually use the asset than disposing the asset, then you should not decide to sell the asset. Okay? If you will be able to recover more in selling the asset, then you should not decide to continually use the asset. That is why under the standard, your recoverable amount will be the higher between the value in use and the fair value less cost to sell. And the problem in your financial accounting class is that the problem will sometimes not give you the value in use. So you will be the one to solve for the value in use. And what is your value in use? It is the present value of all the expected cash flows from the from continually using the asset. Okay. Also, on the other hand, the fair value less cost to sell will not also be given. You will be asked to solve for the fair value less cost to sell. You will be given with the fair value and you will be given with the cost of disposal. Okay? So supposedly impairment is very simple. An asset is impaired if carrying amount is greater than the recoverable amount. The problem now is we will have to determine what is our recoverable amount, and the recoverable amount would either be the value in use or the fair value less cost to sell. And you're simply going to choose the higher amount. But as what you have experienced in your financial accounting, these amounts will not be readily given. Okay, so that's why many students would find impairment difficult. But for your US GAAP class, the impairment test is very simple class. Okay, so forget what you've learned. Actually, do not forget that. Set aside what you have learned. Have you learned in class? Set aside what you have encountered before as regards impairment. Let's move on to US GAAP. How then is the impairment test done under the US GAAP? And this would be your most important takeaway for this topic, yes, the impairment test. So remember that under the US GAAP, the impairment process consists of two steps. Okay? So if this will be asked as an essay question in your pre-finals, explain the impairment process, the impairment test process for long-term assets under the US GAAP. Okay, you start by stating that the impairment process involves two steps, okay, or two tests. The first test is the recoverability test, and the second test is the impairment loss test. Again, the impairment process consists of two steps, okay, the recoverability test and the impairment loss test. In the first step, you determine whether the asset is impaired. In the second step, you determine the amount of impairment loss. Again, the first step is the recoverability test, wherein you will determine whether the asset is impaired or not. In the second test, the impairment loss test, you will now be determining the amount of impairment loss. Okay? And you will only proceed to the second test class if after the first step you have determined that the asset is impaired. If after the first step you have determined that the asset is not impaired, obviously your impairment loss will be zero. Okay, you proceed only to the second test if you have determined that the asset is impaired. Okay, so let's read the first problem first. The problem first. The company purchased a machine for 400,000 5 years ago. Over the last 5 years, the company has recorded a total of 250,000 of depreciation expense. The company has estimated that the machine will generate a total of 180,000 in undiscounted cash flows over its remaining life, and that the fair value would be of the machine would be 125,000. What if any impairment loss should the company record on this machine? Let's do the first test first, the recoverability test. In the recoverability test class, you compare the book value of the carrying amount with the undiscounted cash flow, which would serve as your recoverable amount. Okay, so the first step is just to compare the recoverable amount class, which will be your undiscounted cash flows from the asset. You compare it with the book value or the carrying amount. Let's start with the carrying amount or the book value. Is the book or the carrying amount the 400,000? No, the 400,000 here is the original cost. If you're going to review for impairment, make sure you update the carrying amount or the book value. Since we are already 5 years into the asset class, the carrying amount will no longer be 400. It is reduced by the accumulated depreciation. How much is the accumulated depreciation here? 250. So if the original cost was 400,000 and you have accumulated depreciation of 250, then your book value or your carrying amount would be 150. And you compare that with what amount? You compare that with the 180. Okay? No need to choose between value in use and fair value less cost to sell. You compare the book value or the carrying amount with the undiscounted cash flows that are expected to be received from the asset. So you compare 150 and 180. And when will we say that the asset is impaired? We will say the asset is impaired if the book value or the carrying amount is greater than the undiscounted cash flows or the recoverable amount. So in this case, which one is greater, the book value or the undiscounted cash flows? Undiscounted cash flow. So what will be our conclusion? Is the asset impaired or not? No, because we still expect to recover 180 from the asset. So if the first step tells us that the asset is not impaired, do we proceed to the impairment loss test? No. What then would be your answer if you will be asked for the amount of impairment loss? It would be 0. It's actually very simple, class. First step, compare carrying amount with the undiscounted cash flows that will be received from the asset. If, assuming the asset is impaired, what's the next step? You will compare the book value with the fair value. Okay? You will compare the book value with the fair value. So you use the undiscounted cash flows just to check, just to determine whether or not the asset is impaired. But in determining the amount of impairment loss, you will be comparing the book value with the fair value. Okay, so it's actually very straightforward compared to your standards. Okay, so the answer here would be 0. Let's proceed to the next problem. The company purchases a machine for 100,000. It plans to use the machine for 4 years and then sell it for 10,000. It expects to produce 4,000 units in year 1, 6,000 units in year 2, 2,000 in year 3, and 3,000 in year 4. If the company uses straight line depreciation, what will be the book value of the machine after year 2? Okay, so it's important you understand the question. What does the question tell us? That we will have to use the straight line depreciation. So the amount that will be produced by the asset class will no longer be relevant. Because again, we are not using units of production method, we are using straight line method. And what do you do under the straight line method? You just spread out the cost of the asset throughout its useful life. Okay, but be careful, not just any cost. It will not be the original cost, but it would be the depreciable cost. Okay, so this should be very basic to you, class. Is the depreciable cost necessarily the same as the original cost? The answer is no. What's the distinct difference between your original cost and the depreciable cost? It would be your residual or salvage value. So if you will be asked in this problem, how much is the depreciable cost of the asset? It would be 90,000. Hopefully everyone finds the 90,000. Where did we get the 90,000? The cost of 100 minus the 10,000 salvage value. Now, it might not have been called a salvage value in the problem, but you're expected to know that the 10,000 there represents the salvage or residual value. How did we know? The problem told us that it would then sell the asset for 10,000 after it will use it for 4 years. So that basically describes your salvage or residual value. Okay? So once you have your depreciable cost, what do you do? Once you have your depreciable cost, you divide it by the useful life. Okay? And here the useful life would be, the useful or the service life would be 4 years. So that's all you have to do. 90,000 divided by 4, that would give you 22,500. Is 90,000 divided by 4 22,500? And how do we call that 22,500? That would be your annual depreciation. Okay. In your financial accounting classes, class, how do they make this somewhat difficult? They would tell you that the asset was acquired during the year and not at the start of the year. So for example, it's acquired in April 1, then you will have to adjust the depreciation. You prorate it for the number of months. So if it's April 1, then your depreciation would be for 9 months lang. You multiply the annual depreciation by 9 over 12. But for your CMA exam class, rarely will you encounter those kind of problems. Again, the problems will be very straightforward. Okay. Now, what is the question asking class? Book value after year 2. How do you get the book value? It's the original cost minus the accumulated depreciation. So the challenge on your part here would be to compute for the accumulated depreciation. How much again is the annual depreciation? 22,500. Since we are solving for year 2, how many years worth of depreciation will be in our accumulated depreciation? 2 years. So what do? Multiply 22,500 by 2, that would give you 45,000. And what do we do again with the accumulated depreciation? Deduct that from the original cost, which was 100,000. So 100,000 minus 45,000 would give you a carrying amount of 55,000. Now, just as a precaution class, I've committed this mistake a lot of times before. Um, for example, if it's 10 years and you are asked, what's the carrying amount on year A? So what would be a possible solution? Since it's already year 8 and the remaining years is just 2 years, I will just multiply the carrying amount or the cost by 2 over 10. Especially if you're using, especially if you're using straight line depreciation. For example, 100,000 ang cost, and then useful life is 10 years. You're asked how much is the carrying amount after year 8. So what would be a possible solution? Since you have already consumed 8, the remaining would be 2 years. So multiply 100,000 by 2 over 10, and that will give you 20,000. Okay, what if we do that here? Useful life is 4 years, remaining life is 2 years. What will happen if you multiply 100,000 by 2 over 4? You would get 50,000. But why is that answer wrong? Because you forgot to take into account the residual value class. If you use that solution, you should be multiplying it with the depreciable cost. So if you are going to use 2 over 4, you multiply 2 over 4 by the depreciable cost. How much again is the depreciable cost? 90,000. 90,000 times 2 over 4, that will give you 45,000, which is still the wrong answer, which is also among the choices. Why is 45,000 wrong? Because you will have to add back the residual value. So there are a lot of ways where you can get this wrong because you're trying to look for a shortcut class. But the safest way, what's the safest way of solving for your book value, your carrying amount? Start with the original cost and just deduct the accumulated depreciation. Okay? Your book value, your carrying amount would simply be the original cost minus the accumulated depreciation. So again, the answer here is 55,000. Next, which of the following situation is not an example of what could cause impairment in an asset? Okay, so the choices here actually, you can easily answer this by process of elimination. The answer here is the third choice. A current period gain combined with a history of gains or a projection of continuing gains associated with the asset. If you regularly receive gain from the asset class, would you be able to conclude that the asset is impaired? The answer is no. So the opposite is actually true as to labeling the asset as impaired. Okay, so if you change the third choice class, a current period loss combined with a history of losses or a projection of continuing losses associated with the asset would result in the conclusion that the asset is impaired. Okay? So by process of elimination, this should be very easy for you to answer. All the other choices are indicator for an asset that is impaired. Okay, a significant adverse change in how the asset is used or its physical condition. Okay, adverse meaning it's not a good change. a significant adverse change in legal factors or in the business climate. And the fourth choice, a realization that the asset will be disposed of significantly before the end of its estimated useful life. Those are indicators of an impaired asset. Next, the company has a patented technology for finely grinding spices while maintaining flavor. This has allowed the company to make some of the world's finest spices. However, recently a competitor patented a newer technology that results in the production of more potent spices than the company's spices. What would you recommend they do to revalue the intangible asset? Okay, so again, remember that the impairment process has two steps. What's the first step, class? Recoverability test, and the second step is the impairment loss test. Okay, so the answer here would be your letter B or the second choice. You run a recoverability test and then an impairment loss test by comparing book value to fair value. Okay, so this would be the kind of questions that could come out for this topic. Next, the company purchased the machine 5 years ago for 100,000. When it purchased the machine, the company expected to use it for 7 years and then sell it for 9,000. In the 5 years of use, the company recorded 65,000 of depreciation. If the company sells the machine for 28,000, what is the impact of the sale on the company's financial statements? Plus, a common question for long-term assets would be the determination of a gain or loss on disposal. And how do you determine the gain or loss on disposal? Obviously, compare it with the sales proceeds. You compare the sales proceeds with the book value or the carrying amount of the asset. Okay? Let's start with the first thing that we need. We need the sales proceeds. Are we given the sales proceeds class? Yes, which is your 28,000. What's the other thing we need to determine the gain or loss on disposal? The updated carrying amount or the book value at the time of the sale, which we expect not to be given. So we will just have to solve that one. How do we get the carrying amount of the book value class? The original cost minus the accumulated depreciation. How much is the original cost class? 100,000. Are we given with the accumulated depreciation? Yes, the problem says here, in the 5 years of use, the company recorded 65,000 of depreciation. This would serve as our accumulated depreciation. So, original cost of 100,000 divided by, minus accumulated depreciation of 65,000, our carrying amount would be 35,000. Now, do we have the two things we need to solve for the gain or loss of disposal? Yes. So selling price of 28,000 and then carrying amount of 35 will give you a difference of 7,000. Is that a gain or a loss? 28 minus 35. Loss. Okay? In determining the loss class, you just compare. The value in your books is 35, but how much did you get for the asset man lang? Only 28. So you're short for 7,000. So that you will not have any loss, what should have been the price of the asset? 35. If you sell it for any price lower than 35, that would be a loss. When will it be a gain? If you sell it for more than the book value of 35,000. So the answer here would be letter A will record a loss of 7,000. Let's check the other choices. The company will record cash inflow from operating activities. That is incorrect. The 28,000 will be reported as what kind of cash flow, guys? Sale of a machine, investing activity. Okay, it will be from an investing activity. You cannot have both A and C as true. Okay, so definitely letter C is incompatible with letter A. Next, the company's assets will decrease by 100,000. Okay, how much will be the decrease here? It would actually be just 7,000. You recognize the asset with a book value of 35, and you will have additional cash in the amount of 28. So the increase here will just be 7,000. Here, SYD, if this comes out, class, then you should offer a prayer, class, of thanks. The sum of the year's digits method of depreciation is being used for a machine with a 5-year estimated useful life. What would be the fraction applied to the cost to be depreciated? Your numerator, class, would be the remaining years. Your denominator would be the sum of the years. So if the useful life is 5, class, how do you determine the denominator? You add 5, 4, 3, 2, and 1. If you add 5, 4, 3, 2, and 1, you will get 15. What if the useful life is 50? Do you add 50, 49, 48 down to 1? Yes, you can do that, but you shouldn't. Okay, what's the faster way of solving for the aggregate sum, class? N times n plus 1 all over 2. N representing the number of years. So if the useful life is 50, 50 times quantity 50 plus 1 all over 2. So basically 50 times 51. How much is 50 times 51? 2550. Then divided by 2, 1275. That would be the sum of 1, 2, 3 down to 50. Okay, but will you be asked those kind of scenarios in the exam? No. Okay, but again, let's check na lang. Let's use 5. So 5 times 5 plus 1, 5 times 6 would be 30 divided all over 2 divided by 2. That will give you 15. As for the numerator, class, what does the problem say? What would be the fraction applied to the cost to be depreciated in the second year? So if you are still in the second year, then the asset has still 4 more remaining years. So your numerator would be 4. So the fraction that will be used would be 4 over 15. If you can recall in your financial accounting classes, class, what's the tricky part with, what's the tricky problems for SYD, class? Again, the depreciation period will not start on January 1. If the asset is acquired on April 1, you will use the fraction for April 1 this year to March 31 this year. And it will be challenging for most students, okay? If it's in the second year, you will be using 2 fractions. You'll be using the first fraction for the first 3 months. You'll be using the second fraction for the next 9 months of the year. Okay, but again, I don't think those kind of problems will come out for your exams. Next, which of the following statements concerning asset impairment is correct? Let's check the first choice. The process for determining if intangible assets with indefinite lives are impaired is the same for determining if tangible assets are impaired. Okay, letter B, an impairment loss on a tangible asset is calculated by comparing the asset's book value to the undiscounted cash flows. What's wrong with letter B, class? You determine the impairment loss by comparing the book value with the fair value. Okay, what do you do when you compare the book value and the undiscounted cash flow? It's not to determine the amount of loss, it's to determine whether the asset is impaired. The recoverability test for a tangible asset is based on the comparison between the undiscounted cash flows expected from the asset and its fair market value. Again, what's wrong here? How do you perform the recoverability test? Compare the book value and the undiscounted cash flows expected from the asset. The correct answer here, class, would be letter D, or the fourth choice. The process for determining, the process of determining if goodwill is impaired is a one-step process. Okay, because if we're talking about goodwill, class, if the fair value is higher, then obviously the goodwill is not impaired. If the fair value is lower than the recorded value, the book value, then the goodwill is impaired, and the loss recorded is the difference uh, between the book value and the fair value. Okay, because you do not have undiscounted cash flows from goodwill, huh? You do not have undiscounted cash flows from goodwill. Okay, so if we're talking, so second takeaway, class. The first takeaway is for your impairment process. Second takeaway would be that the impairment process for goodwill only involves a one-step process. Okay, so please make sure to remember this one. Next, the company purchases a machine for 300,000. It plans to use the machine for 4 years and then sell it for 20,000. Uh, Somewhat familiar already, but the amounts are different. And this time, the method to be used is no longer straight line. We had a similar problem, but the one used was straight line. Here, the method that will be used would be your SYD. What would be the book value of the machine at the end of year 2? Careful at the end of year 2. What are we trying to solve here, class? We're trying to solve book value. And again, because this should be part of your stock knowledge already. How do you get the book value, the carrying amount? Original cost minus accumulated depreciation. Okay, this should be part of your stock knowledge already. Are we given with the original cost, class? The answer is yes, which is 300,000. Next, let's compute for the accumulated depreciation. And we do this by computing for the depreciation for year 1 and computing for the depreciation of year 2. Okay, let's start with year 1. What fraction are we going to use for year 1? What's the useful life? 4 years. So let's start with the denominator. What denominator will be used for our depreciation computation test? If it's 4, this one is faster. 4 times 4 plus 1 all over 2, or 1 plus 2 plus 3 plus 4. This should be part of your stock knowledge already. That the sum of 1, 2, 3, and 4 is 10. You should be able to pull this out from your mind. So 1 plus 2 plus 3 plus 4 is 10. Okay, so that will be our denominator. What fraction are we going to use for, what will be our numerator for the first year? 4. If it's the first year, you still have 4 years of use in the asset. Okay, so 4 over 10, that would be 40%. Let's do this step by step. So what do we multiply the 4 over 10 plus? Do we multiply it with 300, or do we multiply it with 280? Where do we multiply the 4 over 10? Multiply it with the depreciable cost. Okay? Where did I get the 380, class? The cost is 300, and then the residual value is 20. So the depreciable cost is 280. So multiply 280 by 4 over 10. How much is that? 112,000. That would be the depreciation for that would be the depreciation for year 1. Let's go to year 2. What fraction are we going to use for year 2? 3 over 10. Multiply that with 280. How much is 3 over tenths of 280? It's 280. Sorry, it's 84. Okay, so how much is depreciation in year one? 112. In year two, 84. So accumulated depreciation would be 196. And you now deduct the 196 from, you deduct it from 280 or 300? 300. Okay. So 300 minus 196 will give you 104,000. Okay. Because instead of doing this year by year, supposedly what are you going to do? So year 1 numerator is 4 over 10. Year 2 numerator is 3 over 10. So your accumulated depreciation for the first 2 years would be 7 over 10. But again, for those who want to compute it very quickly, instead of using 7 over 10, since we are looking for book value, what will others do? They will use the complement. What's the what's the fraction for the remaining 2 years? It would be a combined 3 over 10. So what will others do? They will multiply 3 over 10 with 280. And that should be helpful. How much is 3 tenths of 280? How much is 3 tenths of 280? 84? 84. But why is that not the correct answer? Because if you use the remaining class, make sure to add back the residual value. So 84 plus the residual value of 20 will still give you 104. The other possible error, you decided to use 3 over 10, 3 over 10 for the remaining 2 years, but you multiplied it with the 300. That would be wrong. Okay? So again, what's the safest na lang yun? What's the safest? Original cost minus accumulated depreciation. Okay. Let's have a very quick break.